Trends seen in recent weeks strengthened as the latest jobs and investment data showed fears of a U.S. recession abating. As a result, long bond yields edged higher, moving back into positive territory in France. Equities were the big winners from the change in perception. Boris Johnson's landslide election victory helped dispel some uncertainty, as it means the end of government and parliamentary paralysis in the UK. However, the kind of relationship the UK will have with Europe is still not clear. Sentiment was also boosted by rumors that the US and China had reached a Phase 1 agreement. Against this backdrop, our portfolios rose with markets after raising equity exposure, especially as the US and UK, but also Europe and Japan, all advanced. Indices made further gains and have now largely returned more than 25% year-to-date, the best performance since 2009. There were few results, as is natural for the period, but Inditex beat third-quarter sales and operating profit expectations. The worst piece of news came from Tullow Oil, which sank by an impressive 72% after it decided to pass on its dividend and announced the departure of its CEO. Getlink posted a poor 13% drop in shuttle car and lorry traffic, but gained at the end of the week on Boris Johnson's election victory. The Conservatives now have a substantial majority, while Jeremy Corbyn's Labour Party suffered one of its worst ever defeats. Sterling jumped to a 2.5-year high on the news, and stocks like banks, utilities, and defense, which would have been the hardest hit if Labour Party had won, all enjoyed strong rallies. Exports like pharma, however, retreated due to sterling's strength. U.S. equity markets closed on a strong note this week on the announcement that President Trump would agree to a limited trade agreement with Beijing, which would avert new tariffs set to take effect on December 15th. This announcement spurred a wave of optimism amongst investors and lifted a majority overhang on markets, with most sectors rallying. The S&P 500 closed up 0.7%, while the Nasdaq edged 0.8% higher as at Thursday close. On the monetary policy front, U.S. central banks policymakers at an FOMC meeting opted to leave monetary policy unchanged. WTI crude is up 0.8%, off worse levels despite an unexpected U.S. inventory build. On the macro front, November CPI came in higher on energy prices, but core CPI was in line. 10-year Treasury slipped to 1.89%. On the company front, Facebook closed sharply down on the news that the FTC was filing an injunction request expressing antitrust concerns on the company's integration of Messenger, Instagram, and WhatsApp. Adobe also reported Q4 results in line with consensus, with positive forward guidance in margins and revenues upside. Japanese stocks moved within a narrow range ahead of December 15th, when Washington's fourth punitive hike on Chinese imports is to come into force. The Topix edged down 0.03% for this week as of Thursday. Although October machinery orders fell short of market expectations, a seasonally adjusted 6% drop, economy-sensitive sectors such as oil and coal products, textile and apparels, and mining outperformed. Sumitomo Metal and Mining gained 4.9%, Tokyo Electro 4.6%, and Sony put on 3.3%. In contrast, the precision instruments sector lost 1.98%. On Friday, markets made strong gains on reports of an initial US-China agreement and hopes Brexit would happen quickly after the Conservative Party's emphatic election win. The MSCI emerging markets rose 2% as at Thursday's close, after President Trump reportedly signed off on a Phase 1 trade deal with China, averting new tariffs set to take effect on December 15th. While terms have supposedly been agreed upon, the legal text still has to be finalized. On the macroeconomic front, Chinese exports fell 1.1% year-on-year in November, the fourth consecutive month of contraction, with exports to the U.S. plunging 23% year-on-year versus minus 16% in October, as another spillover effect of trade tariffs. Imports rose 0.3% year-on-year, up for the first time since April, versus a 1.8% decline forecast by economists. CPI rose 4.5% year-on-year in November, a 7-year high largely driven by a 110% spike in pork prices year-on-year. Core inflation remained subdued at 1.4%. The annual economic planning meeting signaled more effective fiscal policies in 2020, while monetary settings will remain prudent. On the corporate front, Sunny Optical recorded strong November shipments, while Xiaomi launched the most affordable 5G smartphone, priced at 1,999 renminbi, or $284, or 40% lower than the cheapest 5G smartphone model. Well, that's all for today. Thank you for watching. Subscribe to our channel to track the market pulse and get the latest economic data.